Hello, everyone, and welcome to another quarterly update and Q&A brought to you by the team at Apollo Crypto. My name is Henrik Andersson. I'm co-founder and CIO, and today, as usual, I'm joined by Pratik Kala, who is our head of research and portfolio manager. And for anyone new, Apollo Crypto is a multi-strategy investment fund. We're headquartered in Melbourne, Australia, and we invest globally. We have an 8-year successful track record. We have 3 active funds and a tokenized strategy. And we are focused solely on managing crypto assets and strategies on behalf of wholesale investors, family offices, and fund of funds. Thanks everyone for attending today. We hold these webinars on a quarterly basis, and we also publish a weekly newsletter as well as long-form research. You can head to our website, apollocrypto.com, subscribe to our blogs and newsletter. The purpose of today's webinar is to inform our investors and followers and to provide general update on the crypto markets and our funds. And as a reminder, this is a general discussion and is not to be taken as financial advice. Please do your own research when considering an investment in crypto markets. As always, we're happy to take questions from the audience. So please submit any questions whenever you like through the Q&A feature, and we'll answer the questions at the end of the webinar. With that said, let's get started. I'll go ahead and share my screen. Let me have a look. Can you see my screen okay, Pratik?
Yes, I can.
Good. So the agenda for today's webinar, first we'll recap Q2 and the market and our funds, and then we'll look at our perspective on the second half of this year. We'll talk about quantum risk for crypto, MicroStrategy or strategy, which is called now, and what's happening there. Also talk about tokenized stocks, and we'll talk about some of the highlights in our portfolio. And then, as I said, we'll end with the Q&A. So I'll hand it to you, Pratik.
Thanks, Henrik. So quarter 2 of 2026 started incredibly strong, but ended in being a difficult quarter for crypto prices, predominantly because of Strategy's risk being in front of mind of investors. Just to refresh, Strategy, or the listed company MicroStrategy, is one of the largest holders of Bitcoin out there. And they were on a very aggressive Bitcoin accumulation strategy for over the last 2 years. And due to a tactical error on their part, they had to basically determine if they had to sell some Bitcoin in order to monetize some of their debt and preference sort of equity dividend payments. So that was in front of mind in quarter 2, started strong, but this risk sort of came in around in May. And so that led to investor sentiment souring and some of the ETF flows turning negative. That being said, the market is experiencing short-term weakness as a result, and as we'll discuss shortly after, the strategy risk is now being managed, and the long-term process in tokenization, on-chain capital markets, and DeFi infrastructure remains stronger than ever. Every day we are seeing very large institutions come into the space and actively deploy capital and engage in various different sectors of this space. Some of the highlights include real-world asset tokenization. This is growing at a very rapid pace, now up to $330 billion. Top decentralized protocols such as Hyperliquid continue to maintain robust fundamentals and buy back billions of dollars worth of their tokens per year, and have billions of dollars of 12-month sort of trailing revenue. It's one of the most profitable companies in the world, actually, but if you counted it per employee basis. And crypto rails are actually getting highlights across multiple mainstream newspapers. So we were featured in the likes of Bloomberg, AFR, Wall Street Journal, and so on. as crypto rails have successfully priced in mega IPOs such as SpaceX and Cerebras, and potentially also the upcoming OpenAI and Anthropic IPOs. So these things are happening very actively with very high volumes on crypto rails and are referenced by traditional media all the time. And this is really becoming very positive in terms of the attention into the fundamental aspects of the crypto industry. Would like to draw your attention on this graph here. This is a price of Bitcoin as the proxy for the entire market. You'll notice there are 3 lines here, and would like to draw your attention to the blue vertical line on the left. That is when the US and Iran war started. And if you'll notice, Bitcoin almost bottomed out there. So the entire world, oil was shooting up, equities were correcting, volatility was going up. But Bitcoin surprisingly printed a bottom at that point and started grinding higher. This was a very, very positive sign, and we started grinding higher up to the low 80s, $80,000 mark. But then we eventually ended up with the strategy risk, which is the orange line on the right. So strategy risk was, as I mentioned, the largest secular buyer of Bitcoin potentially starting to sell. Now, for the people in the industry that were watching strategy closely, like us, we knew that the sales won't be significant because of how strategy structured their cap table. However, the headlines did not make for a good print. So the headlines obviously were the largest Bitcoin holders now selling. So that led to a correction, as you see from that orange line there. And now that issue has been resolved since and managed. And now we are basing out and bottoming out again and stabilizing here to where we were before the US-Iran war. So we'll talk more about all the risks that the market was concerned about in Q2 and how all of them have now been addressed and how this bottom forming process is very positive for Bitcoin and the broader market. And this is just another chart. The red arrow that you see there on the right just indicates the exact time at which strategy started seeing some issues. We saw a large weekly inflows, consecutive weekly outflows of Bitcoin from spot ETFs. So as I said, the headline wasn't correct. It was a tactical error from strategy, which led to a correction in the broader market. But that has been resolved, and as you'll see the little green ticks coming in on the end, that as that has now been resolved and managed, that we are now moving back up onto positive territory in terms of inflows for ETFs in the market.
Thanks for that, Pratik. Now we're going to talk about our offerings. The first one we'll talk about is the Apollo Crypto Fund, which is our Australian crypto fund. We've been running this fund for 8 years plus, and since inception, it's been compounding at 13.5% per annum. Recently, it's been outperforming our benchmark, which is the broad crypto market. And year to date, it's outperformed by some 500 basis points. So strong performance, but Bitcoin and Ethereum, which are 2 of the largest holdings in the fund, has posted negative returns for this year. So there's a negative return year to date, but we've been outperforming our benchmark. The portfolio itself is consistent of Bitcoin, Ethereum, and investment into our top ideas in the altcoin space, as well as an allocation into our market neutral strategy. So this is a multi-strategy approach, and it's designed to be your one vehicle for your crypto exposure. Anything you'd like to add to that, Pratik?
No, I think it's fantastic. Bitcoin, Ethereum had a pretty bad year to date, so very happy that we've been outperforming the benchmark and overall have seen positive returns.
Yeah, I think up until mid-year, Bitcoin was down something like 33%, and Ethereum down 47%, if I'm not mistaken, something like that. So heavily negative on the big assets, but we have been outperforming in a difficult market.
Yes.
Our second fund that we'll talk about is the Apollo Crypto Frontier Fund. So this is a fund that is purely investing into altcoins. So basically our best ideas outside Bitcoin and Ethereum. And it's actually had a positive return year to date, despite a very difficult market. Our benchmark, which consists of all the altcoin space, basically, is down 31%. So a huge outperformance for the Apollo Crypto Frontier Fund. And this is thanks to our focus on revenue generating protocols in the DeFi space. Some of them have been performing really well. Many of them are buying back their own tokens, etc. So this strategy is paying dividends. This is not an Australian fund, it's a Cayman fund. So it's a US dollar denominated fund, and there is no lock-in. So across all our offerings, we have monthly liquidity.
I'm very, just to add in as well, incredibly pleased of what we've been able to deliver here on a positive year-to-date return. As it shows, the benchmark is down 31, and the broader space is down between 50 to 70% negative. So we're very happy that we've been able to deliver a positive return for our investors.
Yeah, absolutely. It's remarkable. The final fund offering we'll talk about is the Apollo Crypto Market Neutral Fund. So this is a very different fund, unlike the two other funds. This is a market neutral fund. We mainly use stablecoins to generate the return. This is a fund that's been running since 2020, so a fairly long track record. It's been compounding at over 12% per annum. It's a very consistent return. So for the past 30 months, we've had a positive monthly return in this fund. The last negative return was recorded, I believe, in 2023. So quite a while ago now. We'll talk more about kind of the strategies, but I think we'll talk about tokenization. Pratik mentioned it, but I think that kind of opens up more strategies for this fund, which will be positive going forward, I believe. Last year, we received the first prize for the best risk return fund in APAC by HFM Awards in Hong Kong. So that was a great achievement by the team. And this year we are nominated again for the same award. Our final offering is a tokenized yield strategy. It's issued by a European company called Midas as a certificate. It's a similar yield strategy to the market neutral fund. You can learn more about this tokenized strategy on midas.app/mapollo. So this is an on-chain offering. You need a crypto wallet to access mApollo. And again, it's a market neutral offering, similar return risk characteristics as the market neutral fund. And I'll hand it back to you, Pratik.
Yeah, thanks, Henrik. I want to talk about the second half of this year and talk about some of the key points that I am optimistic about and why I feel like we are closing in on the bottom. Now, again, with markets, nobody has a crystal ball, but based on what I'm seeing and just broader view on various metrics that we track, it feels like we are very close to the bottom, given no left tail surprises. So I want to talk about a bunch of reasons why. The first one is strategy or MicroStrategy. The risk is out of the way. I'll talk more about this in the upcoming slides. The ETF flows are steadying, as I showed in one of the charts above. We saw one of the largest consecutive streaks of ETF outflows for Bitcoin. since inception of these products in 2024, but that is now steadying. And the reason was intertwined with the strategy risk and the poor headlines that led to. The on-chain metrics for crypto are showing supportive signs. So again, it was a difficult year across the board. A lot of the metrics were, a lot of the prices were down and metrics were down, but on-chain metrics are now showing supportive signs and ticking back up, which is very positive. We are seeing revenue driving DeFi protocols, knocking it out of the park. I think the likes of Hyperliquid and Lighter have delivered anywhere between 2 to 4 times returns, so 200 to 400% rallies year to date, because the market is now maturing and recognizing that tokens need a way to distribute revenue back to token holders, which has been our thesis for well over 18 months. And so that's another reason why the Frontier Fund is outperforming, which we're happy about. Clarity for people that are not watching is if it's passed, it will be a significant catalyst. Whether or not it will pass is currently being debated. We should hear an update within this week or the next. Again, as usual with some of our contacts in Washington, it's politics. It's a 660-page document and a lot of negotiations between the two parts of the aisle in Washington, and we're hopeful that we will get a positive outcome there. And if passed, it would be a very significant catalyst for the entire industry as well. So it's expected hopefully in the second half of this year. We are seeing more and more projects adhering to standardized financial reporting standards and transparency frameworks. This was lacking in crypto over the last few years. And it's very refreshing to see quality projects come out and adhere to these standards. And this is giving more confidence to institutional investors. We have seen the likes of Apollo Global and BlackRock take straight token positions in the likes of Morpho and Uniswap because they are also acknowledging the transparent sort of frameworks that some of these projects are now following. So it's a welcome sign, and more projects are heading in that direction. And for the projects that we guide and speak to, we are also driving them in that direction. So as an industry, we are healing in that direction on more transparency and standardized reporting standards. Crypto also had a problem in the past about dual equity and token structures, where there would be a project which would have equity and token, and where the value accrued to or where the profits were attributed to was not clear. These tokens have been punished in conversations, and we have conversations with most projects every month. These are being punished. We are telling them that either pick equity or tokens. If you're going to pick tokens, drive all the value to tokens. And so we're seeing the quality projects again head in that direction, and seeing the market reward these tokens. The likes of Hyperliquid, Lighter, derive some of these tokens that we will talk about later as well. And crypto rails, as I said, I think when the SpaceX IPO was happening, I was getting inboxes every day from the journalists on the, all the financial news sites and the major blue chip ones, talking about how is it possible that the crypto rails such as Hyperliquid and Lighter were able to predict the outcome of the biggest IPO in history, the SpaceX IPO. And it is phenomenal because not only are crypto people operating in these markets now, their views that the traders at Morgan Stanley and Goldman Sachs are also operating in these markets and using them to hedge some of this IPO risk. And the latest IPO that is coming, that is in the front of everyone's mind, is a Chinese IPO, CXMT. Now, as you'd know, typically almost anybody outside of China, it's very difficult to get access to Chinese IPOs and A shares. But crypto rails are providing a proxy to accessing those markets. It's currently trading on Hyperliquid at a premium. But again, we will see if we are able to yet again predict the outcome of an IPO, even in China. So there's a lot of attention being driven to these rails, which is very positive to see. And the quantum risk is also being addressed formally. Last quarter, that was the main topic on what are we going to do about quantum. The industries come together, and we are addressing it formally now, as I'll talk about in the next 2 slides. So the biggest thing that led to the Q2 drawdown was the strategy risk, or the MicroStrategy risk. As the title says, it's now managed. And actually, it is a brilliant outcome because I can tell you for a month and a half, I was not sleeping during US hours because I really wanted to see what strategy is going to do or how they're going to manage this situation. So the outcome that we have now arrived to, that the company's now arrived to, is a phenomenal and ideal outcome. And it's great that they went in that direction. So to refresh some people, Strategy, again, is the largest holder of Bitcoin. Over the last 2 to 3 years, they went on a very aggressive Bitcoin buying spree, backed by a capital stack, which you'll see on the right. These are all tickers of various issuance that Strategy has done that offers effectively anywhere between 8 to 12% yield or per month in some cases, as long as you buy some of these products. And Strategy then used this money to buy Bitcoin with the underlying thesis that Bitcoin would deliver 30% CAGR per year. Now, this ran into some trouble because of a tactical error by management at Strategy, which they acknowledged. Everyone was looking at a metric. All investors were looking at a metric called US dollar dividend reserve. That had well over 2 years of sufficient cash that the company had to feed all of these products and service the dividends. But Michael Saylor, the CEO, potentially made a tactical error by drawing down on that aggressively to basically retire one of the convertible bonds. So without getting into the mechanics of it, the 2 year of cash dividend buffer that they had was drawn down to 4 months. And that's what created a oh my God moment and the poor headlines and the potential for Strategy to have to sell Bitcoin. So that was bad in the month of May. But since then, Strategy has come out and added guardrails in that process. They have now bolstered their dividend payments for up to 3 years and have guaranteed to the market that they would not draw down on that to retire other products. So overall, it's the best outcome for Bitcoin and broader crypto. And Strategy now, instead of being the main character in crypto, is now in the rear view mirror and not a risk anymore in the eyes of the market, which is why we're also seeing stabilization in the prices. And the quantum risk. The post-quantum proposals are now officially in place. For the people that really follow Bitcoin, there is a standard called BIP 360 and BIP 361. These are effectively working towards making Bitcoin post-quantum resistant. For people that are still concerned that, okay, these proposals may not get enacted in time, just to refresh, cracking Bitcoin's cryptography would take 500,000 physical qubits. The recent most powerful quantum computer can only do 105. So it's many, many years away still. And now we have formal proposals in place to resolve this matter. It's being discussed on the ideal approach to do this, but industry has also come together. So Galaxy has launched a Quantum Advisory Council, which is going to grant up to $5 million to various developers to come up with a technical upgrade. And MicroStrategy also has launched a Bitcoin security program. So it's refreshing to see all the industry work together to resolve this. And I have very little concern going forward that the quantum issue will be an issue. And I think it will be resolved in due time. So some of the biggest risks of Q2, which was the Strategy risk, is now gone. And the quantum risk is also formally in the back burner. So it's great to see, and I think setting us up for a nice bottoming out process here in Bitcoin.
So we'll talk a little bit about tokenized stocks, but just a reminder as well that you can ask questions in the Q&A feature on Zoom. So please ask any questions you might have. Anyway, so tokenized stocks is one of the biggest narratives right now in crypto, meaning that you can trade equities on chain. And this has really taken off in the last year or so. If you look at the value of all the stocks on chain, is up by 20x in 1 year. It's across Ethereum, Solana, new chains like Robinhood. What this enables is 24/7 permissionless trading, basically accessible by anyone that can access blockchain rails. And it also enables these tokenized stocks to interact in DeFi, not just for trading, but also for lending and borrowing against stocks. The latest entrance, as I mentioned, is Robinhood that recently launched their L2. We'll talk about that more shortly. But you will most likely see more and more companies launch their tokenized stocks offerings on chain. We expect Coinbase and Bullish, two large exchanges, to follow shortly and issue their versions of tokenized stocks on chain. So this is bringing real value on chain, and all this activity is bringing revenue to DeFi protocols that we are investing into.
Yeah, and if I can add as well, people think tokenized stocks, so what? How's it different to stocks? But just the bigger picture here is the promise of tokenization was what I have said many times, which is it's impossible today if you had a bunch of CBA or BHP or Apple shares to transfer to anybody around the world, like a WhatsApp message or like an iMessage if you're using the iPhone. Like, it is incredibly difficult. You have to do a lot of paperwork, off-market transfers, HIN, chess, a whole bunch of complications that go with it. And if you're holding US stocks, even more difficult. With tokenized stocks, it's literally like sending a WhatsApp message. You can just select the stock and say, I want to send 5 CBA stocks to somebody else anywhere in the world, and it would settle instantly in 5 to 10 seconds. So the regulatory framework is closing in around that, and blockchain rails are a native place for this to happen. So incredibly bullish.
And it's open access to anyone. You don't necessarily need a traditional brokerage account to access, for example, US stocks around the world. So that's very powerful. So in the previous webinars, we've been highlighting something from the portfolio, and today we chose to highlight Lighter, which we did mention earlier. It's similar to Hyperliquid. It's spot and perpetuals exchange. They are built on top of Ethereum, and they recently launched their version on Robinhood chain as well. It's currently the largest position in the Frontier Fund, and it's had a really good run in the last couple of months, as you can see from the chart on the right side. So it's contributed positively to the performance of the Frontier Fund this year. They have this model that we talked about where they use their revenue to buy back and burn their token lit. And so far, they burned 6.3% of their circulating supply so far. So that's significant. As I said, they are working with Robinhood. They're also working with Telegram. We'll talk more about Telegram as well on the next slides. We expect Lighter to make several big announcements in the second half of this year. It's a US-centric team, and we expect Lighter to be one of the main beneficiaries if Clarity Act is enacted. We think basically the Clarity Act is a coin toss right now. But if it happens, Lighter should be one of the main beneficiaries.
And to highlight as well on the Lighter story and Hyperliquid story as well, encourage people to Google up the perpification of the world. So perpetual futures is a crypto innovation, and everyone's turning around and now seeing how this product is superior to oftentimes traditional futures and options. If the broader market adopts perps or perpetual futures en masse, then the total addressable market is, in the multi-trillion dollars, like in terms of assets traded. And with assets such as Hyperliquid and Lighter, the sky is the limit if the regulatory framework closes in and supports them, because they are buying back a significant amount of all the trading fees, and no other exchange does that. Traditional exchange does that. Whether you use Interactive Brokers or CBA, they'll take your trading fees, they'll book it as a profit and distribute it to maybe shareholders, a fraction of it. In these instances, these protocols are buying up to 100% of all the profits, like 99 to 100%, which is very, very unique and bullish. So yeah.
Yeah, exactly. These companies, Lighter, Hyperliquid, have dozens of employees, versus Interactive Brokers have thousands of employees, right? Coinbase have thousands of employees. So you can see the scalability of something that is natively on-chain. So that's really good for margins. They can buy back a lot of tokens and bring value to the tokens that we own. And perhaps it's not just on crypto, as you mentioned, Pratik. It's also on equities, commodities, FX, any asset out there. I did mention Robinhood a few times. So they recently launched the Robinhood chain. So Robinhood is mainly a US-focused brokerage. They have 28 million customers. And in the last couple of weeks, they launched an Ethereum L2 chain, as well as a non-custodial crypto app wallet. It's there in the non-custodial app that you can download from the App Store, that you can access Lighter, for example, very easily. You can easily trade tokenized stocks in that wallet. It's a non-custodial wallet, meaning you have ownership of the assets in the wallet. And Telegram, just in the last few days, you see the X post by Pavel Durov, who is the head of Telegram. He's teasing the rollout of their non-custodial crypto wallets, and he's saying it will be the largest rollout of such a wallet in human history. I guess Telegram has over 1 billion users, so everyone will basically get their own non-custodial crypto wallet to be able to access things like tokenized stocks, Lighter, etc. So together, Web2 companies like Robinhood and Telegram, they're bringing millions of users on chain. So that's something we love to see, because they're bringing a lot of users, new users to the crypto rails, and that brings revenue and activity in DeFi. Yeah, so we'll finish up by talking about the current portfolio positioning. Pratik, I'll hand back to you.
Yep, thanks, Henrik. So our portfolio remains concentrated portfolio in high conviction projects with a verifiable revenue and clear product market fit, and ideally also revenue distribution back to token holders via buyback and burns or buybacks. We are focused on liquid strategies instead of VC or primary deals. And across the portfolio, we are generating superior yield, a very good yield across every asset within the portfolio where we can stake. Some of the top picks in our portfolio, Lighter, which we've spoken about. It's a US-based category winner, buying back a lot of its tokens. Hyperliquid, again, a clear category winner. It's a more global presence for Hyperliquid. Lighter is more US-centric, but both of them are sort of expanding aggressively. Zcash was a new addition. It is a cryptographic privacy protocol, which is paired with Bitcoin's scarcity. So Zcash also only has 21 million tokens, like Bitcoin. However, Bitcoin is not fully private. It's you could trace transactions, you could trace wallets. Zcash is building on top of that and having privacy first as its principle. And that's taken a lot of interest from various parts of the market. Sky Protocol is one of the largest on-chain stablecoin issuers with really strong earnings, because they deposit the stablecoins into various different places and generate a positive interest margin and buy back the tokens with that. So it's one of the largest in the market over there. And Syrup, similar to that, it is bringing traditional finance lending on-chain and composable with DeFi more broadly. Jupiter is a diversified on-chain business. It is dominating on Solana. It does everything, really. It does too many things, I think. It does spot, it does perps, it does prediction markets, it does pre-IPO stocks, it does NFTs, you name it. It does it does a lot of things. So it's a very well diversified on-chain business that is very successful in Solana and growing there. And Derive, it is the largest on-chain options venue. Options in crypto have still been lackluster in terms of volumes, because perpetual futures are just a better product for many people and easier to understand. But we are seeing more sophisticated parties come in and use options for various reasons, such as hedging or generating yield or premium. Quite positive to see that as well.
Fantastic. That's end our presentation. We will move on to Q&A. I don't think we got any questions at the moment, so maybe I just summarize what we talked about so far. So when it comes to our Apollo Crypto Fund and the Frontier Fund, we've been outperforming recently. I think that's mainly thanks to our focus on revenue generating protocols in the altcoin space. Many of them are buying back their own tokens, bringing revenue back to token holders. On the market neutral side, we've had 30 months of positive returns, and we are again nominated for the HFM Hedge Fund Awards in Hong Kong coming up. The market-wise, Pratik talked about MicroStrategy, or it's called Strategy now. I think that risk is pretty much out of the way. The next big event in the crypto markets, we believe, is the Clarity Act. We'll have more information about the Clarity Act in the next couple of weeks. It looks like a coin toss if it will be enacted or not. I don't think it's necessarily priced in the market currently, but if it's enacted, we're going to see a lot of activity in the crypto market, so it definitely will be a positive going forward. And anything I missed, Pratik?
No, I think that's a phenomenal summary. And please, ask us any questions in the Q&A. Love answering one-on-one questions, but if uncomfortable to ask here, you can always reach out to us directly. We're very reachable and always happy to chat with any of our investors or just generally about what we're seeing in the market. Absolutely.
We have an open door policy. You can always email us and we'll get back to you. Also happy to meet in Sydney or Melbourne. Pratik is based in Sydney, I'm based in Melbourne, so always happy to meet up as well to discuss crypto or funds. And if there are no other questions, we'll see you at the next webinar in the quarter.
Thank you.
Thank you so much. Bye now.